Hey, hope you guys are doing amazing. Look, I'm so excited to be making this video. Some of you are going to love it, some of you are going to hate it. Now, this video is specifically for any person that's brand new and wants to get into the stock market. Hence why it's called How to Get Into the Stock Market for Beginners. Hey guys, hope you are doing amazing. TJ here. So I wanted to talk to you about how you can invest in the stock market as a beginner using some of my strategies and what's worked for me and my portfolio. Do me a favor, make sure you like, comment and subscribe. Hit the notification bell because this channel is going to blow your mind and your finances. So, stock market, incredible place. Historically, it's where you create wealth. It's where you outperform inflation. It's where you outperform your traditional savings account. So I want to talk to you about why every single person should be investing in the stock market, why it's a prime opportunity right now, why the election is a great opportunity for you to start getting started in investing. Why the coronavirus, why the lockdown, why the pandemic, while the country is in disarray and is absolutely crazy, why it would be a smart idea to start investing. Now, I'm going to be doing a bunch of different videos on this specific topic, but today's video specifically is just to whet your appetite and to explain to you that you should be investing in the stock market and you should start considering it now. So how do you get started in the stock market? Well, number one, you've got to develop a strategy. You've got to find a strategy, which means you don't just jump into the stock market straight away. Now, I'm not saying you've got to sit down and study the entire stock market for the next 10 to 15 years because you're just going to procrastinate, but you've got to find a strategy. What are you looking at? Are you looking at funds? Are you looking at tech companies? Are you looking at marijuana companies? What is it? What's your interest? What's the subject line? What's the industry? What's the sector that you have a relative interest in? And that should be your starting point, and that forms the basis for a strategy to be developed. What you don't want to do is to invest in every single thing that's available on the stock market. You don't want to invest your money in every single thing because it means you will not become an expert, you will not become abreast, you will not be able to keep in tune with the news relating to your specific investment. This is why I say develop a strategy. Study the market, find your interest, find what you like paying attention to. My interest is the tech market, hence why a bunch of my investments are in the tech space. So find your strategy, start with that. Number two, you've got to understand if you're going to get into the stock market, it's a long play. Don't make the mistake that many people see on Instagram. Hey, I've just got into a trade and I'm trading for just 20 seconds and I've made £1 million. Don't fall for that. That's called trading. What I'm showing you here is investing. Now, typically the stock market will outperform if you have an investment that you leave in for a 3 to 5 to 10 year period. So it's not just an investment for today, it's an investment to play the long game. I want to show you something. The whole idea of any company that's made it into the stock market is growth. Is to return an investment back to their shareholders, which means primarily their goal is growth. So I want to let you in into a small little secret. Find a company that's shown historical growth. Over the last 10, 15, 20, 100 years, they're showing growth. They're showing an increase. They're showing a pattern of growth, which means unless something crazy or catastrophic happens, that business is still going to follow that trajectory of growth. So what you want to do is find an entry point, a reasonable entry point, and get involved. One of the reasons I mentioned earlier on with regards to the election, with regards to the coronavirus is there's a lot of uncertainty in the market right now. So a bunch of investors are taking their money and they're hiding it under their pillows, which means we see a bunch of uncertainty in the market, which causes certain shares to fall. Now again, look at the pattern. If you see a company that's been trading around $100 or £100, and for whatever reason, based on, let's say, the coronavirus or the pandemic, the shares have rescinded, and that same stock that's been consistent over £100 is now at, let's say, £60. Once you do your analysis and you see that that business or that company is on the trajectory for growth, you want to get involved so you can ride back the wave so it can get back to its initial glory, which means you haven't bought at an overpriced or overinflated price. You've got it at the right time. So again, look for opportunities that are presented right now, simply because there's a lot of uncertainty in the market and a bunch of traditional and new investors are going to be withdrawing their money. There's going to be some uncertainty in certain businesses and their share price is going to go down, which means it presents a perfect opportunity for you to get in. Going back to the election before I carry on, uncertainty. If Trump wins, what's going to happen? If Biden wins, what's going to happen? This presents a perfect opportunity for the savvy investor that's looking to get their money working for them to get involved in the stock market. Now, forget about trying to get into the market once it bottoms out. You're never going to know once it's going to bottom out. Bottom out simply means once it goes right to the lowest possible price. That's not going to happen. The truth is, you want to find a reasonable position because you are willing to play the long game. Now, I wish I could find some stats and show you some stats. In fact, if I get a moment, I will show you some stats. If we look at the election, for example, there's uncertainty regarding Trump, there's uncertainty regarding Biden. Just again, I'm not in the politics space, so you guys with politics, don't chat to me. But the point I'm trying to make is, let's say Biden plans to increase certain corporate tax. Trump is probably going to reduce or give tax breaks to certain multinationals and certain large companies. So again, if Biden wins, a bunch of companies might relocate from certain states to another state in order to protect their tax position. Again, these tiny little things will cause share prices to go up or go down. But I want to show you why you want to play the long game. I want to show you why you want to play the long game, and I'm just getting it up on my screen right now. And we're going to go for a company like Amazon, which again I'm going to spend some time talking later on in another video why Amazon is one of my favorite investments and one of my best performing investments, because I'm playing the long game. So let's go back here, and of course this is just on the table maths, but I want to show you something. Amazon 5 years ago, 2015, on the 13th of November 2015, you could have bought a specific share, one share in Amazon, for £642. If you had played the long game and you had put your money, £642, into Amazon during that period of time, and you left it in there, of course there were going to be some dips, and you don't panic about the dips because you've done your analysis. You've done the technical analysis and you're confident that Amazon's going the long distance. So you leave your money in there, and guess what? If you had left it in there, your £642 would now be worth, as of today, £3,339. This is how you start to create wealth. In fact, let's do another calculation so you understand my position a little bit better. Let's imagine you had, let's say, £6,000. You put £6,000 into Amazon in 2015. Yep, you put £6,000 into Amazon in 2015. That £6,000, of course, give or take inflation, give or take behavioral patterns, so and so, that could potentially be worth around £30,000 now, and that's in a 5-year period. Let me not get started on Tesla. I'll do another video on Tesla and how crazy that particular company is, but we can talk about that at a later stage. I just want to address the point. If you are new to investing, please listen up carefully. Play the long game. Don't get greedy, don't get excited, because what happens is you get a little bit excited when it moves, and then you get a bit jittery when it goes back down. And that's not good for an old person like myself and my heart, because my investment could go up, it could go down, and as long as you're playing a long game, it's completely fine. You can genuinely leave it there. Number 3, you want to invest in companies that you use. So it means you have an interest in that business. You understand the functionality of that business. You understand why that business exists because you are a customer of that business. You understand their ethics. You know what they stand for. You understand who's running the business. So it means it's a company that you believe in and you invest your money there. Number 4, this is vitally important. Before you make an investment, you want to look at the leadership. Same thing. Before you buy something, before you put your money somewhere, you want to know who's in charge of managing that money. And this is why it's so important to analyze the CEO, to read on the management team, to understand the ethos, the foundations of the business, which is the person that's controlling and managing your investment. This is so crucial information that so many people get wrong. What I'm trying to do is stop you from just putting your money into something because it sounds good or it looks fancy or because everyone's talking about it online. These are strategies that you've got to understand before you make an investment. Now again, I'm not trying to make it sound difficult. I'm just trying to make sure your investment is protected. Number 5, crucial. What is the plan for the future? See, why do I invest in Amazon? Because I read and I understand leadership, number 1. I understand the leadership. I understand Jeff's vision as much as I can. Obviously, he doesn't call me and say, hey, TJ, this is what I'm going to do with Amazon tomorrow. But the point is this, I understand the vision where the company is planning to go. I've read into the next product that they're looking to bring out. I've read into companies that they're considering purchasing and understanding why. So it means that they're moving from this space into that space and there's profit here and there's money here. So I bought into the long-term vision. So what is the vision for the company? What is their mission? What are they planning to achieve? And your job is to find that out. Does it align with what you want? Does it align with where you stand? Then you want to invest your money in that. This is very important. Only invest in a company after you've taken at least 24 hours to think about it. Wait for 24 hours before you invest in any company. Just like anything, in fact, before you make any purchases, before you make any investment, before you let go of any of your money, because this is hard-earned money, before you ever do that, you want to wait for at least 24 hours. 24 hours, which means you sleep on it. You sit down and research it. Then you sleep on it more. Well, you shouldn't be sleeping for more than 24 hours anyway. But the point is this. You want to take time to find information to back up your belief. So it means once you make that investment, you can leave it there and trust your judgment. Don't jump into an investment. But let me address something. Some people will say, hey, well, if I leave it for 24 hours, I might miss the opportunity. The truth is this, no, you will not. No, you will not, because the value might go up, the value might go down, but if we're playing the long game, you are not trying to find small, tiny, quick gains. We're looking at, is this a formidable business that's got legs to go to the future? And if the answer is yes, then you can afford to wait for 24 hours to analyze the patterns, the charts, and see what's happening in that business. Different story if you're going to IPO, but again, that's another video. Let me know in the comment section if you want me to break down some IPOs that I've been involved in, and maybe just break down the term IPO and what it is, how it works, how you can make money, how you can also lose money in an IPO. So again, that disappears regarding the 24 hours when you're talking about an IPO. Where are some of the places that you can actually start as a brand new person wanting to get involved in the stock market? So I'll give you some examples. I use companies like Freetrade, Trading 212, and I use Hargreaves, Lansdowne, HL, or EQI, so Equinity. So those are the 4 places that you can go into. Now Hargreaves charge you a fee, EQI charge you a fee, Trading 212 don't charge you a fee to buy a specific investment. Now I was going to say I recommend, I don't necessarily recommend because they're not paying me, but I do believe if you are brand new and you are starting, I think Trading 212 is a great place to start. They offer something called fractional shares, and I'll do a video on that in a later date. But fractional shares are an incredible opportunity for brand new people who just want to wet their feet, who are just happy to maybe even invest £1 to £10 just to gain a bit of confidence and gain an understanding about how the stock market works. Fractional shares, in my opinion, are an incredible opportunity. Once in a while, when I want to buy some shares, and if I've just got some money lying around in my account, I might have £200 in my account, and I say, hey, do you know what? I would rather invest that money as opposed to buy some KFC or some McDonald's. I don't eat McDonald's anymore, but instead of buying some KFC, I just say, well, go on my Trading 212 app and simply invest that £100 or that £200 in a company that I've been eyeing up for quite some time. So look, just to give you a quick tip, Amazon shares are £3,338 as I'm looking right now. You don't have to have £3,336 which has gone down right now, you don't have to have that specific or that whole amount to invest in the stock market. If you're doing it through fractional shares, it means you can buy a percentage of that share, hence the word fractional shares. But again, I'll do a video on that another time. Look, I hope that was helpful. I will be doing a bit more information. I'm going to be talking to you guys about raw finance, information that can change your life if you do it correctly. I hope this video was useful. I will do more in-depth ones, and I want you guys just let me know in the comment section what works for you. What are you looking for? What do you need some answers to that's gonna push you to the next level financially?